In today's video, I am going to be breaking down 3 different ETFs that I am classifying as life-changing. These are ETFs that if you were to invest in these over time, they will give you massive gains, whether it be from growth or from dividends or from both. So let's get down and let's check out these 3 ETFs and see if they're a good investment. So this first ETF is the Vanguard Growth Index Fund ETF. This is the VUG on the stock market. This is on the NYSE. And the dividend on this one is not massive, but it does pay a dividend of 0.62%, which is basically like interest while your money is growing. So it's not too bad, and it's, in my opinion, pretty good, mainly because, of course, the expense ratio is extremely low at 0.04%, which basically means if you were to invest $100, basically 0.04 cents is how much it will cost for this company, Vanguard, to invest your money. It's got high average volume of over 800,000 shares being traded per day. And what I really do like is the fact that the inception date is very long ago. It's before the 2008 recession in 2004. And of course, from there we can see how this ETF performs during some of the rough periods. So here we see a max chart, which is funny because it shows max and it's definitely not back to 2004. We need to scroll over. So here we go in 2004, and from 2004 until about 2008, just before, we see a modest gain. It goes from about 50 up to about 65-ish dollars, which is about a 50%, about 20 to 30, 40% gain depending on when you jumped in. Then it dumped from there all the way below 50 to about 25, which would have been an absolute ridiculous good time to buy. And this is why I say you want to do small increments of investing because, of course, over time they grow. And if you were to invest during that time, even just $100, you would be turning that $100 into $1,000 today. But we can see that it has some pretty good growth. It has a lot of downturns, as we would expect from a growth ETF. However, what we can see from here is it jumped from 200 down to 150 during the coronavirus pandemic, and then it jumped right back up, which would have meant this would be a fantastic buying opportunity. And considering it only lost about 25% of its value while the market and some indexes lost a heck of a lot more and didn't recover as fast, but since then it has had a very fantastic growth recovery. We can see that it does pay a quarterly dividend. The only thing that is a bit scary to me is the fact that sometimes the dividend does go down. So for example, March 18 to 19, the dividend went down. However, December to December, the dividend went up. So that's the only thing I like. I tend to like ETFs that give me a set number, like for example ZWC, ZWK, they give me a set number every single month, but this is still not bad considering that you're getting this ETF for more on the growth side and not the dividend side. Its holdings right now, at the time of making this video, its top 10 holdings is Apple, Microsoft, Amazon, Facebook, Alphabet, both Google basically, as well as Tesla, Nvidia, Visa, and Home Depot. And I think that tech could make a little bit of a run very soon. And of course, more and more people are going to be using visas, more and more people are going to be shopping online, and because of that, Visa is going to be used more and more into the future, in my own personal opinion. Next is the CI Tech Giants Covered Call ETF. Now, I've mentioned this multiple times on this channel. This is TXF on the stock market in Canada. And this one is a dividend play, but also a growth play. So, of course, you do get right now an 11.5% yield, which is absolutely massive. You do have to pay a much higher MER, which means that for every $100 on this ETF that you spend on it, you actually have to pay 71 cents, which is a bit higher than the last ETF and the next ETF that I'm going to talk about. However, the reason is because it is a covered call strategy, which basically means that it holds stock and then it sells a call against that stock, and then you make a premium back from the call option premium, which then pays you that yield. Volume is not bad at 47,000 shares traded per day. And I really like this chart. We can see that about 5 years ago it was trading between $12 and $12.50, and now it's stating at $21 per share. So that is a pretty good return on investment as it is, while paying a double-digit dividend. So this is not just a growth story, but also a dividend play as well. And considering that it's starting to trade a bit sideways, that's telling me that it's actually maybe a good time to buy, because it seems like this stock tends to go in runs. Runs for a bit, cools off. Runs for a bit, and then it's going to cool off again. Just check out those dividends, absolutely massive. If you look at just March alone, year over year, you're going from 32 cents to 54 cents per share. This is a very big gaining dividend stock, or ETF I should say. Its top 10 holdings right now is Nvidia, which is going to be, in my opinion, a very big grower into the future. Applied Materials, Alphabet, which is Google, Oracle, Intuit, Adobe, Facebook, Salesforce, IBM, which that's the only negative on this one in my opinion is IBM, and then Microsoft. And it will always hold at least 25 of the largest tech companies measured by market capitalization. The third is, of course, ARK. This one actually, I made a mistake. I thought it was 0.07, but it's actually 0.75 MER. And ARK Fintech Innovation ETF is ARKF. I actually like this one a bit better than ARKK. This is my own personal opinion, however. It does have a high average volume of 1.5 million shares being traded per day. Its yield is really small, which is basically like interest right now at 0.35%. So not huge. This one also pays a once per year dividend. It tends to trade sideways with a slight uptick with, of course, a downturn. But this one, again, we have to remember this ETF has not been around for a while. So I think that there could be some sideways trading for a while at this point because it's had such a big growth. But there's a lot of people saying that tech is going to have another big gain between July and October. So this could be a good way to play that. Let's also not forget that Cathie Wood is just an amazing investor. She has her own YouTube channel, and she actually goes out and talks about what the market is doing every once in a while. So definitely go check her out. And that's the yearly dividend. Every December, they do pay a dividend. The only thing I dislike is the fact that 2020 went down in a dividend versus 2019. But again, we were dealing with the coronavirus, so that just may be a blip, or it may not be. We don't have enough history to tell us. Its top 10 holdings right now, which equal almost half of its total assets, is Square, and I think that's going to be a big gainer because there's going to be more and more people looking to use credit but also running their own businesses going into the future. And Shopify is a big one because, of course, everyone is going to be going online when it comes to stores and businesses that are just starting to open up. Zillow is, of course, for us Canadians, it's basically like realtor.ca. It's essentially a real estate website. And then there's PayPal, which again, more and more businesses are going online with online payments. And another one that's really big is Tencent, even though it's a Chinese company and I disagree with investing in Chinese companies, that's still a pretty darn good holding. So overall, I think that these could have massive growth once again coming up very soon. But also, especially TXF is in a safe play essentially because we do have that history, and it pays that massive dividend, which has been paying for a while. So of course, do your own research. Never trust a random person on the internet. See what investment works best for you. I hope that you've enjoyed. If you have, hit that like button, subscribe, and I'll see you guys again next time.